taxation world, how does it work? Like taking the money or profits from one LLC of your business, and with the monies, can we reinvest in the business? I know some people have asked me that, and does that give better taxation when we reuse the money or profits from the business to build more businesses?
It does from this standpoint, right? What am I paying? So let's say, just as an example, you run a residential assisted living house, and after 2 years, you've made enough money to buy another
Yes.
residential assisted living house, right? So now you take the money out of your real estate LLC that you've been the original first one, and you go and buy another house, right? So it all depends on what you do with the money. If you took the money out of your LLC and you went and you invested it in another residential assisted living, you would definitely get a benefit. If you went and you invested it, you just started a business and you were just using it, say, for operating capital, right? You probably would get the deduction for whatever expenses you paid using that operational capital, but it would typically be less than the depreciation that you would get by buying another property. So it all depends on it all depends on what you do with it. And this is a mistake I see a lot of business owners making, right? Let's say I run a flower shop, right? I'm not in the real estate business, but I run the world's most successful flower shop, right? And it literally generates $1 million of extra cash every year, right?
Yeah.
So 1 year I go and I buy a rental property. I go out and I buy an apartment building, right? Okay. But I'm not a real estate professional, and I make $1 million a year. I don't have the ability to deduct rental losses against my ordinary income.
Yes.
So now what I've done, and I see people do this all the time, they sucked all the money out of their business. They bought an investment, which overall is probably not the worst idea in the world, but you should have saved enough to pay your taxes, right? So if you were going to buy $1 million apartment building, you should have bought maybe a $700,000 apartment building and kept $300 for your taxes, right? Because you weren't going to, if you had talked to somebody like myself, you would have known you weren't going to get the deduction. So I see people pull money out of their LLCs all the time, buy things with them that they won't get a tax deduction on. So you can do it either way. The real question is, do you have the ability to deduct the losses? And that's something that's part of year-round tax planning. You need to be talking to your CPA and asking those questions before you do it, so that you know what the ramifications are.